Hi there, Jason Moser, analyst with Motley Fool One, and thanks again for joining us for another edition of Ask a Fool. Today we're taking a question from Jeff Massengill, and Jeff asks, if every share is owned 100% of the time, then what is a sell-off and how are share prices determined? And Jeff goes on to note that he figured that selling was what made prices go down and buying made prices go up. Jeff, I understand your question, but let's look at one part of your question, and I think this may help you better understand the nature of a sell-off and how this works. So when you said, I always thought selling reduced the price, buying drove prices up. So in some cases, yes, buying will drive prices up, but that's when a stock is in demand. Now let's look at a stock, for example, that delivers a really poor earnings report, and then to top it all off, they announce an SEC investigation into its accounting practices. So really, there's just a lot of bad news here, and this prompts investors to head for the exits on the stock. All at once, think about this, they just say, there's too much bad news in here, I want to get out, and so they all start selling. Now you think about the fact there's going to be some serious volume here, a lot of shares hitting the market, and with all of these sellers starting to sell at once, the action here is in the selling. The selling is driving the prices down. Now for every seller there is a buyer, and that's always worth remembering in the stock market, but it's also fundamental negotiation at work here. Buyers of this stock are only going to buy when they feel that the price represents enough of a bargain to account for whatever risk that may be involved in buying the stock after all that bad news. So buying here isn't pushing up the prices, it's actually soaking up the inventory of all the selling, of all the shares that are being offered up for sale because the sellers want out no matter what. So it's kind of like being a forced seller in a situation. You just don't want that to happen because you have no real power in the negotiation. I hope that clears it up for you. It's a very interesting question, and I certainly enjoyed thinking about it. For more information, make sure to check out Fool.com.